Yesterday, I said that I was looking for a run to 1420 in a corrective phase and a test of an uptrend. This is exactly what we saw today. Pulling up my late wave analysis chart, you can see that I'm changing the style yet once again, and I want to break down this chart one step at a time now. I think I have it right where I want it. I gave myself a little cheat sheet too up here. You can see I have the different labelings and names of the different degrees and waves, so hopefully that'll help me get through this a little quicker and a little more concisely. As you can see, I am looking at a minor wave that is under construction right here, and it's happening in this upward channel, which is fantastic. And now that minor wave subdivides into minute waves, and I have those labeled here in circles. There's the top of 1, and the bottom of 2 is here. Now I'm looking for the top of 3, which should set a high towards $18, and I have some chart pattern analysis to correlate with that. But what I want to look at more are the minuet waves, those waves that are 1 degree smaller than the minute waves. And that is where the focus is today on my analysis. So I'm going to go ahead and zoom into the beginning of our third minute wave so we can see the minuets. I'm going to pull it up just a little bit. And you know what? I'm going to go into the 1 minute chart. I think the 1 minute chart's good because then you're going to be able to see the sub-minuets as well. There we go. That's a fantastic view. So here we have the beginning of our third minute wave. And our minuet is going to start with a wave 1, which is a 5-cycle pattern or a 5-wave pattern. And because the 1 degree larger is up, so will the motive wave be up and have 5 waves. So here we go. Here's wave 1, 2, and then wave 3 extends with sub-minuets. 1, 2, 3, 4, 5. And this is all wave 3. Okay, see how that worked? Now, corrective phase 4 came down, and it did test an uptrend that was through here. And then we had, boom, an explosion to the very tippy top of that minute wave. So I'm going to run through that again one more time. It was 1, 2, and actually 3, which had 5 sub-minuets, 1, 2, 3, 4, 5. 1, 2, 3 minuet waves, 4, and then that 5th minuet wave marks the top. And then at this point, I'm looking for that corrective minuet wave 2. Confusing, right? And we had it. And because now we are going down, the sub-minuets are going to have 5 waves as well, because the phase 2 corrective wave is down, and so it's going to have a 5-wave motive wave form. So confusing. Here it is. 1, 2, 3, 4, and then a truncated 5. And that 5th can be truncated as long as it has, as long as it maintains that 5-wave form. And it does. On the teeniest degree. So this would be like beyond sub-minuet. This would be, I'd have to change all of my labeling to accommodate that, but I'm not going to do that. Here we have though 1, 2, and then a small 1, 2, 3, 4, 5, truncated. And then it just starts to grind sideways. And what is this? Is this an ABC correction? It's really hard to tell, but I have seen this before, and I want to show where too. It was back here. Truncated 5th, weird sideways grind, then thing went boo, just took off, right? I'm really excited because I think that's going to happen again. Yeah. So this was a bigger pennant, a leading triangle, I believe. And now we have another little pennant, which I believe is also a leading triangle, that's just fractaling into this big uptrend. So going into tomorrow, what am I looking for? I'm actually looking for the top of minuet wave 3, and it by rule will have to be larger than the first wave, because that's an Elliott wave rule. That third wave, that's the big one, and that third one gets extensions on its third wave a lot. So what's that mean? It means that I'm looking for a high of at least 1673. Yeah, that's a big rally. I'm thinking that we're going to get a big rally, and this would be the minimum for the top of that wave. And whether or not we reach that tomorrow or Friday remains to be seen, and I don't know if it's going to take more than a day, but it's been taking about a day to go through these motive waves and about half a day to go through the corrective waves. So overall, I'm feeling very bullish. It is possible that if this breaks down, that would be an extension of this second minuet wave, and it would look like a measured move down at that point. This high at 1 and this low at 5 being the first leg of that measured move down, and we'd find that the drop would be of equal amplitude. I figure that if this does break down, we're probably going to find support at 1250 to 1227, and at that point, we'll see a bounce higher. If the price drops below the bottom here at C, that's going to be a big issue for me, and I honestly don't see that happening. If that happens, I'm going to have to deconstruct this analysis and start over. So hopefully we just get that nice, fat, sweet rally up to 16 tomorrow, and we can all just go to bed happy with our gains and not worry about having to do a bunch of analysis. That's my Elliott wave theory, and now I'm going to push into a chart pattern study that I have, and this looks really good because, as you can see, I had a price target at 1420, and today we peaked at 1425. Just a sweet touch of that level, and then a 1, 2, 3 correction. It really does look like we're going to go higher. That's just all I have to it. Something else I want to point out, too, is a partial decline that appears on a larger time frame as we are in an upward channel. We have the touch points. 1, 2, 3, 4. Channel established. 5? Nope. Partial decline. Ooh, why am I excited about a partial decline? Let me go ahead and just pull up Bulkowski's website here, thepatternsight.com, and we'll go into partial decline. Clickety, clickety, clack, 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 clack. I'm going to pull this up, make it bigger, and I'm going to zoom in a couple of times for you. Ooh, that was too close. There it is. He says, partial declines are looping chart patterns that appear at the end of broadening patterns and rectangles. They predict an immediate upward breakout, but are not always correct. And he says broadening patterns and rectangles, I find them to be useful in channels as well. And it's possible that he actually might even mention it there. But here's the basic concept, that as the price moves from one side of a pattern to another, and it stops before reaching the absolute opposite side of the pattern, this would be a partial decline or a partial rise, depending on which way the price is going. So I see that in channels all the time. I want to say it's actually on his page about channels. I don't really know. I think I've read it. It might be in one of his books. This is why I tell people that you gotta read his books, because some of the information is just in there. Not everything is on his website, but here you go. Partial decline. If you can determine that a partial decline has formed, then trade it. Expect the breakout to be upward. The link to the left provides more information. Partial declines, right? And here we go. Takes us back to this page where he doesn't mention channels. I do want to really quick plug the books I use. These are the two big ones, Chart Patterns by Thomas Bulkowski, or I should say Getting Started in Chart Patterns, and Elliott Wave Principles. And this was actually a compilation. It's not really written by Frost and Pretcher. It's like, it is, but it also has a lot of commentary in it too. If you read the introduction, it's kind of interesting. I would actually like to read the original text if I could, but nonetheless, those are the two books I use. They are fantastic, and they are the best money I've spent. That's what I like to say. It's probably not true, but whatever. So here we go. We met the pennant target. We have a partial decline. It's just time to move up to the top of that channel. And if we get to the top of that channel, we're probably going to set a higher high. That's what I'm looking for. Just straight and simple. Bullish continuation. That's what I see on AMC. I want to look at GME, IWM, and then SPY in that order now. Just really quickly going to knock them out of the park because I don't want to take an hour editing this today like I generally do. GameStop. I thought that we would see a new high above the top of that flagpole. We did see a high, but we're unable to close at that level, which means that there is still not a buy signal here per Bulkowski's trading tips. You can see here that Bulkowski does offer trading tips on his website. This is on the channel page, of course. Nonetheless. So what to do? I don't know, but the uptrend is still holding. You can see that an uptrend was set back here as the price bottomed within that pennant, that flag, and then moved upward. I looked at this, and it looks like a third wave extension, and that would make this wave here a 4, meaning that unless the fifth wave is truncated, that it will close above this downtrend, confirming that high and tight flag pattern, which would put the price up towards 180. And why is that so important to break that level? Because it's the downtrend that started in January of 2021, if I can pull up a chart long enough to show that. There we go, and I have some fib levels time study here shown, but I'm not going to go into that. You can see that this downtrend's a big deal. Big deal. Big double bottom. Big breakout. This would be a huge breakout. Huge breakout. Like, what? GameStop at 500? Whatever. If GameStop can break this downtrend, okay, let's start talking about crazy numbers. Yeah, crazy numbers. Crazy numbers. Things that don't make sense. That should have never happened, but can. So I'm really optimistic about GameStop. I'm liking what I'm seeing there a lot. Going into IWM, I have, well, I might as well show some of this. I have a lot of new subscribers. So these are chart patterns that I identified and then calculated targets for, and you can do this. You can back test all of Bulkowski's chart patterns. It's not that you look in the past, you make them fit, and you find where. No. It's not like that. There are rules. Once you have new highs and new lows in a time frame, you can establish when those patterns appear. For instance, this symmetrical triangle on the left. We had a low here, a high, a low, a high, and you can see right away off of those 4 touch points, you can boom put down that pattern, and then follow the price as it continues to move inside of those trend lines and calculate the price target. And you can see it was met. There was a topping pattern up here. This is some sort of harmonic pattern that I don't understand, but you can see the symmetrical triangle broke out to the upside, hit the symmetrical target. We had a topping pattern above that level. That's typical. I do typically see topping and bottoming patterns happening above and below horizontal levels of support and resistance, or technical levels such as price targets. And the price did fall down, and it found a level of horizontal support and resistance to form the top of a right angle descending broadening formation. You can see that as the price passed through there, it fell out and found a broadening bottom, which actually had a partial rise, which is bearish, and then broke down, and now we have this ugly double bottom. And what we see today, and for the last couple of weeks, is the formation of this handle, which does look like a rising wedge, but it's still not old enough yet. 1, 2, 3, 4, 5, 6, 7 days long. It takes 3 weeks to develop a wedge. But more importantly, I'm looking at this as a handle. I won't go into it, but Bulkowski describes the breakouts of double bottoms such as this perform better after having formed a consolidation area such as this. And what my Discord has observed is that this is the most successful when that consolidation happens above the confirmation line of the double bottom, which is the intermediate high between the two lows. So here we are on the absolute cusp, on the brink of bullish breakout from this downtrend, on the very edge of sweet gains. And we're just sitting around and waiting. Just sitting around and waiting for that breakout. SPY, same story, except this one's flat. So, I don't know. Maybe it's less interesting. Maybe it's less bearish if it breaks out to the downside. I don't know. So, in the end, the index funds, SPY, IWM, are just consolidating, getting ready to make their move. AMC is poised to make a sweet upward move above the channel that it's currently trending in. And GameStop is also ready to absolutely explode. I know that there are a lot of people following the cost to borrow in order to short AMC, and that is rising, and that makes me excited. It does, but this isn't an indicator that I use. I also know that there was some discussion about Gary Gensler and paying for order flow and blah, 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 blah. That stuff doesn't bother me. I use technical analysis. Everything else, every other narrative, every other news story, anything and everything that is outside of the actual price action, I kind of take as extraneous. It doesn't matter to me. You read these books, and you won't find stuff about cost to borrow. You won't find things about OBV. You won't find things about payment for order flow. You won't. But these principles in these books have been true since they were written, and they will continue to be just that, true. And it doesn't matter what else happens. And it's like, just get your head in the game. Study, read a book. Anyway, I'm not going to get too ranty right now. If you like the content, please subscribe. I'm very close to monetizing. Also, I'm very, 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 very close to, I don't know what. Well, anyway. Happy trading.